Welcome back to Algobot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host here at Algobot, and today we're examining an expert advisor called Thrust Decay Reversal. This is a pure price action strategy. It uses no indicators at all. Instead, it reads the raw geometry of the candles themselves to spot when a strong directional move is quietly running out of energy, and then looks for a reversal. By the end of this video, you'll understand exactly how it reads momentum exhaustion, how it enters, and how it manages risk. Let's get into it. So what exactly does the Thrust Decay Reversal Expert Advisor do? At its core, it's a momentum exhaustion reversal strategy built entirely from price action. There are no moving averages, no oscillators, no indicators of any kind. Every decision comes from the raw geometry of the candles, their highs, their lows, their closes, and the size of their ranges. The thinking behind it is intuitive. When a market is trending in a healthy way, it tends to push with expanding candle ranges, each bar covering more ground than the last. But when a move keeps printing fresh highs or fresh lows while its candle ranges are steadily shrinking, that's a sign the move is losing energy. Buyers or sellers are still stepping in, but at worse and worse prices and with less and less force. The strategy calls that a decaying thrust, and it treats it as a clue that a reversal may be near. Rather than blindly picking a top or a bottom, the expert advisor waits for proof. It needs a run of consistent directional bars, then evidence that the newest bar's range has decayed below the run's peak, and finally a reversal candle that closes firmly back against the move. Only when all three align does it act, fading the exhausted thrust in the opposite direction. This approach can be applied to any symbol and any time frame, since it only reads candles. In our examples we illustrated on RewardRisk, it's likely to appeal to traders who think in terms of price structure and candlestick behavior rather than lagging indicators, and who prefer a defined, rules-based stop and target on every position. As always, this is educational content designed to explain how the logic works. It is not a promise of any particular outcome, and trading always involves risk. Let's break down the logic step by step. The Thrust Decay Reversal Expert Advisor evaluates the chart once per completed bar, so it isn't reacting to every tick. It waits for each candle to close. The first thing it does is make sure no position is already open under its magic number, which is 7327 by default. This keeps it to one position at a time, letting the stop loss and take profit manage the exit. Next, it scans a window of recent bars. The thrust run is a set of consecutive directional bars, and its length is set by the RunLength parameter, which defaults to 4. For an upthrust, the strategy checks that each bar in the run printed a higher high and a higher close than the bar before it, a clean, consistent push upward. For a downthrust, it checks the mirror image, each bar making a lower low and a lower close. Now comes the heart of the idea, decay. While the run keeps making fresh extremes, the strategy measures the range of every bar, the distance from high to low. It finds the largest range in the run, the peak, and compares it to the range of the newest bar. If that newest bar's range has shrunk below the DecayRatio times the peak, 70% by default, the thrust is judged to be decaying. The move is still going, but with less and less conviction. With a decaying thrust confirmed, the strategy waits for one more bar, the reversal candle. For a decaying upthrust, it wants a bearish candle that closes down, closes well off its high, and closes back below the previous bar's close. The phrase well off its high is defined by the reject close PCT parameter, 50% by default, meaning the close has to pull back at least halfway down the candle's range. When all of that lines up, the strategy signals a short. It fades the exhausted up move. A decaying downthrust works in reverse and signals a long. The stop loss is structural. It sits just beyond the extreme of the whole window, plus a cushion set by stop buffer PCT, 20% of the window range by default. The take profit is then placed at a reward to risk multiple of that stop distance, controlled by RewardRisk, which defaults to 1.5. So the distance to the target is 1.5 times the distance to the stop. Remember, this is educational information only. Trading involves risk, and losses are part of the process. Here's the actual MQL5 code that runs inside MetaTrader 5. At the top are the input parameters you can adjust in the Expert Advisor settings. RunLength sets how many consecutive directional bars make up the thrust, defaulting to 4. Decay ratio, at 0.70, defines how far the newest bar's range must shrink relative to the peak. Reject close PCT, 50, controls how strongly the reversal candle must close back into its range. Stop buffer PCT, 20, adds a cushion beyond the extreme for the stop. RewardRisk, 1.5, sets the target as a multiple of risk, and lots sets the order size. Now look at the short side. The Boolean bearish reject is true only when up run holds. The reversal bar closed down. Trig close is less than trig open. The gap from the high down to the close meets the rejection requirement, and the close is back below the last thrust bar's close. When that's true, the code reads the bid price as the entry, places the stop above the window high plus the buffer, computes the risk as stop minus entry, and sets the take profit at entry minus reward risk times risk. Then it calls trade.sell with the lot size, the stop, and the target. The long side is the mirror image. Bullish reject requires down run, a reversal bar that closed up, a close that rejected well off its low, and a close back above the last thrust bar's close. The entry is the ask price. The stop sits below the window low minus the buffer, and the take profit is entry plus reward risk times risk. The code then calls trade.buy. Both sides are symmetrical, the same logic, in opposite directions. Let's bring this to life on the chart. We're looking at an illustrative heuristic sequence, and there are no indicator panels here. Everything the strategy needs is in the candles themselves. Watch the left side first. Price begins to slide lower in a clean, consistent down thrust. The first bar of the run drops and closes near its low. The second pushes lower with an even bigger range. The third extends the move again, and this is the widest, most forceful bar of the run, the peak range. So far this looks like strong, healthy selling. But now watch the fourth and newest bar of the run. It still makes a fresh low. Sellers are still technically in control, but its range has collapsed. It's a small candle compared with that peak. This is the decay the strategy is hunting for. Sellers are pushing to a new low, but with far less conviction than before. The move is running out of energy right around the green reference line, the down thrust low near 1.0830. Then comes the confirmation. The very next candle is bullish. It opens low but closes strongly in the upper half of its range, and it closes back above the previous bar's close. That's the reversal the strategy was waiting for. The buy entry marker appears here as the strategy fades the exhausted down thrust and goes long. The stop loss is placed just beneath that swing low, with the 20% buffer giving the position a little breathing room below the structure. From there, price turns up. The next candles climb steadily, and the long trade runs into its take profit target, placed at 1.5 times the distance to that stop. The take profit marker shows where the buy position closes out. Notice how the reward to risk multiple defines the target structurally, not by guessing a level. Now here's the elegant part. That very rally becomes the next setup. As price keeps rising, it builds an up thrust, one bar making a higher high and higher close, then another with an even wider range, then the widest, most forceful push of all, the peak range near the red reference line, the up thrust high around 1.0918. The buying looks powerful. But again, watch the newest bar of that run. It nudges to a marginal new high, yet its range has shriveled. Buyers are reaching higher and higher prices, but committing less and less. That's the decaying up thrust. The strategy now waits for its reversal candle. The next bar delivers it. It's bearish. It closes down, well off its high, and closes back below the previous bar's close, meeting the 50% rejection requirement. The sell entry marker appears as the strategy fades the exhausted up move and goes short. This time the stop loss sits just above the up thrust high, plus the buffer, protecting the position above the structure. Price then rolls over. The following candles step lower, and the short trade runs into its take profit target, again set at 1.5 times the stop distance. The take profit marker marks where the sell position closes. So in one continuous sequence we've seen both sides of the same idea. A down thrust that decayed and reversed gave a long. The rally it produced exhausted into an up thrust that decayed and reversed, giving a short. In both cases the pattern is identical. A consistent directional run, a clear loss of momentum as ranges shrink, and a reversal candle closing firmly back against the move. The stop always sits beyond the structural extreme, and the target is a fixed multiple of that risk. That's the whole strategy, candle by candle, pure price action, no indicators, just the rhythm of expanding and contracting ranges. Of course, not every setup behaves this cleanly in live markets, and losses do occur. That's our breakdown of the Thrust Decay Reversal Expert Advisor from MetaTrader 5. We covered the core idea of momentum exhaustion, how the strategy measures a decaying thrust through shrinking candle ranges, how it confirms a reversal, and how it sets its structural stop-loss and reward-to-risk target. We also walked through the MQL5 code for both the long and short signals and illustrated a full long and short sequence on the chart. Remember, everything in this video is educational information only. It is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses happen. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.